Hi, folks. Today I'd like to share with you one of the most impactful moments from the latest ICT Twitter space. And I've clipped this part because these are long. They're like over 2 hours long normally. Twitter isn't the best at having people replay these afterwards. If your screen goes from dark mode to day mode, basically wherever you're at with the Twitter space, it resets. So, anyways, I decided to export some of these to YouTube, and I give credit to ICT. And this is the most impactful moment of the last Twitter space that he made. And if you enjoy the video, please give it a thumbs up and subscribe. This will let me know that basically you would like to see more of these condensed versions of the Twitter spaces. Enjoy.
Silver bullet inside of the AM session. That time window is very, very specific. It's inside of 60 minutes. Now, that doesn't mean the entire trade is encapsulated inside that 60 minutes, but most of the time you're going to find it is. But you can find the entry in between 10 o'clock and 11, and all you're looking for is a continuation of what London and or New York is outlining. So we have a target. We're looking for a draw on liquidity. It could be a new week opening gap that we're aiming for. It could be a fair value gap above the marketplace that we're aiming for if we're bullish. And that draw on liquidity is what we're looking for, a reach from that fair value gap that forms, whatever the fair value gap, the first one that forms between 10 o'clock and 11, that one, you're going to see that right there. That's going to be a catalyst for a minimum 5-handle run. The problem is you're not patient. You're impatient, and you're not going to sit still long enough to wait for that fair value gap to form. You're not going to have your chart annotated where the draw on liquidity is going to be reached for. So you're having all these indicators on your chart because you're looking for things to qualify and quantify and confirm something that my concepts don't require an indicator to tell. I'm anticipating before your indicator shows whatever the indicator is going to show, I'm already anticipating all that stuff before the candle's even formed yet that would constitute your indicator creating the setups that you're using it for. I already know when and how the market's going to shift before moving averages later on cross over. Like, I'm way ahead of the curve. My students are way ahead of the curve. We're in the future. When we're trading our chart, we're trading the future. We're entering on a future move that we have a statistical probability that is going to likely form and go to a specific price level by a specific time. And everybody else is waiting for their indicators to talk to them. I'm sorry, I'm tone deaf to indicators. I don't have any interest in them. If you find value in that, that's fine. But I'm not teaching indicators. I'm teaching independence from everything else except for open, high, low, and close and time. The lunch hour, the New York lunch hour, is technically 11 o'clock in the morning to 1 o'clock in the afternoon, New York local time. So it's a 2-hour window. And the reason why is back in the days where we had open outcry and electronic trading hadn't really taken off yet, sometimes if the morning session had a really nice move, guys would go grab a bite to eat because they felt like we would have a very busy afternoon session. So they want to go early, beat the lunch rush to whatever it is they would go and run and get their lunch. Sometimes they would eat at their desk, and others would be just hopped up on goofballs and simply not leaving the floor and just trade through the lunch hour. But lunch hour trading is a real thing, and the algorithm operates on that mechanism of reversing back to whatever the session in the morning stops, wherever they're at, whether they're bull stops or not bull stops, buy stops or bear stops, sell stops or buy stops rather, buy side or sell side. And as an example, let's assume that we've watched the market go higher in London, and then we had a continuation in New York. And whatever the target is that we had for our weekly chart or our daily chart has yet to be reached. So we're still below it. Your expectation for the lunch hour between 11 o'clock and 1 is you want to go through and look for where a relative equal low or a 15-minute low is, because that's exactly where the algorithm's going to go. Don't take my word for what I just said. Don't just say, because ICT said it, I believe it. No, go back and look through your charts and you will see what I just said is algorithmically proven to you. It goes on every single week. It happens this way all the time. It does it all the time. It's flawless. It never fails. It's always in the charts. You can set your life around it as a model. This is one way that you can look outside of the AM session and the PM session and go right in there. Once you understand how liquidity works and what you're looking for, that could be your model, your setup. And I have done examples of that last year and this year, recording my entries. And you're buying those sell stops. As it runs underneath it, you're buying it. What makes it better? If there's a fair value gap or a volume imbalance just underneath that low, that right there is a unicorn. Why is it going to go down there? Because it's going to pick up more orders to allow smart money. It's not selling pressure. It's not a lack of buyers that lets the market drop. That's all the BS that's told to you in books and other authors and people out there that say, I've been in the industry. I used to be a trader at the desk. I'm a market maker. No, you're a trader with a religion. You were a dealer. They called a market maker. I'm talking about the mechanism that is the market that was coded and brought to us as a price engine that causes the fluctuations in price. And then you chase it. Other traders, they chase it. They go in there, buy and sell after it. It will use that human psychology to know that there will be trades printed at the levels they want. When the algorithm's running, it's not going to go to some random level. It always goes to something that I've taught you as a PD array. It's always like that. But yet you dismiss it as it's buying and selling pressure. It's this. Elliott had a wave. It caught a wave. There was supply and demand, buying and selling pressure. It took it up there, down there, whatever. Here's my harmonic platypus pattern. Something that, it takes more faith to believe in that than simply there's an algorithm that controls how far price will go. You have a belief and understanding there's a circuit breaker, right? The market goes down this much, they halt trading, and it has to be, a number of time. Interesting, isn't it? Time has to transpire, and the market needs to uptick before they'll let lower prices start. Well, what in the hell do you think that is? That's control measures. You think that they're going to let us, John Q. Public, Jane Q. Public, we're going to be able to wreck the markets and crash them if we want to collectively? Reddit folks thought that they were going to do that last year, didn't they? Woo! It didn't happen, did it? It did not happen. Sorry. But I told you that was not going to work. But they used them. They let them think that they were pumping it up. They bought it, and then they started selling it, distributing it when they were doing what? We're going to kill these market makers, and we're going to kill these fund managers, and we're going to put them out of business. No, that didn't happen. And they were laughing at all of you on Reddit. And I told you before it was going to happen. In lunch hour, that 15-minute low, when it's been bullish and we haven't hit that weekly or daily objective, it's going to roll down there. It's going to go right below that low. And it's going to engage those sell stops. And the market's going to be flooded with willing sellers at a low price. Why, pray tell, would that be advantageous? Because smart money will be buying those sell stops to reaccumulate new longs, add to or start new positions, and wait for that higher time frame, weekly or daily chart objective to be met. And then you'll watch the PM session roll through and reach higher to that target or get closer to it ever so slightly. That's that liquidity matrix. Understanding where you are in it. You have to know where the market's going to go. That's the first rule of Fight Club here. You have to know, where is it going? You have to know that. If you don't know that, everything else afterwards, you're lost.